In this video, I'm going to show you a 3-step formula to win at crypto trading, as well as a simple strategy and the results. In this video, I am going to be going through some long trading, short trading, a simple 3-step formula to build an actual system, so stick around. I'm not a financial advisor, so everything I say is general information and for education and entertainment purposes only. Trading and investing is incredibly risky, so you must always do your own due diligence, seek your own professional help and guidance before making any decision in the market. And past results are not indicative of future performance. This video is about trading crypto, and there's going to be a few concepts such as short selling and also leverage as well. So if they're new concepts to you or you do want to refresh your memory, I actually have a Learn Crypto series on my YouTube channel, and I'll leave a link for that playlist in the description below. But just like I make my technical analysis quite simple, looking at a few basic support and resistance, obviously swing charts, trends, 50% levels, I also like to make my trading systems very, very simple as well. It's always kind of a layered approach. Start out simple, and then we can add layers of complexity, not too much complexity, but just to really refine and optimize whatever the core strategy is. ByBit has their World Series of trading where there's up to $8 million worth of prizes, so I thought I'd get into the spirit and talk about some actual trading as opposed to just analysis. There's still time to join Jason's and my squad, Crypto Hobos, and there's also some pretty decent sign-up bonuses when you use those links in the description below, so make sure you check them out. But the 3 simple steps are: define your parameters, and the parameters typically include where to get in, where to get out with a loss, and where to get out with a profit. Then obviously testing those parameters to make sure they're actually suitable in the market, and then tweak, test, repeat until your objectives are met. So I'm going to be going through a complete strategy in this video, but full warning and disclaimer. Everybody knows trading is incredibly risky. Most do eventually lose money, and I dare say they don't actually have a strategy, which is why they do end up losing. But it doesn't take away from the fact that trading is risky and most people do lose money. So this here is purely for educational purposes. It's not a complete strategy. Everybody must always do their own research and obviously test their own strategy that's suitable for them and their needs. But we are looking at 3 simple steps to really create a strategy and actually win in cryptocurrency. And for the entry point of view for what I'm going to be talking about today, the where to get into the market, this could be anything. You could have some moving average, you could have a crossover, a breakout level. What I'm going to be using for this video is the TIA Gann swing indicator. There will be a link in the description below for that as well if it does interest you. But the important thing I want to highlight, it's not about getting that indicator. It is about learning a process that's comfortable for you and having a clearly defined entry point. But for this strategy I'm talking about here, I am using this indicator, as you can see there, and the entry point for going long and also going short is simply just trading with the trend. Now the background of this indicator on the screen, that's what defines the trend for what I'm using here. So you can see it goes short, long, and obviously just goes back and forth. When there's no color in the background, the trend is just either in transition or trying to make up its mind which way it wants to go, and the system doesn't trade in those periods. It needs to have a clearly defined trend. So after step 1 is defined of when to be looking for an actual entry, step 2 needs to be the actual entry point. Now for the purpose of this testing, and like I said, it's not a complete strategy. I don't want anyone just rushing out copying this because it needs to be tested and suiting your needs. But for the purpose of this strategy and what I'm going to be talking about, I am looking to enter short. That's how I'm going to be recording the results when the background of the screen turns red, and I'm going to be entering at the either close or the open, depending what color the background is. So when it's short, the background's red. So I'm going to be entering short on the close of the bar that it actually goes red on. You can see here it started in between these bars. I can't actually draw the line in between them, but this is where the market actually went red. So the entry price short is the closing of this particular bar here. So that does obviously define that step 1 of where to get in. Now, where to get out at a loss. So I always want to be defining my risk based on a stop loss in the market. So the stop loss for the purpose of this exercise is behind that previous swing top. So you can see that orange line. I'll just make it a bit thicker for everyone there. So you can really start to see that swing chart as well. But I'm using this swing chart to define my stop loss point, getting out of the loss. So just like I mentioned, I'm going short at the close. I'm going to have my stop loss just above the high of that swing there, as you can see. So that obviously defines 2 out of 3 in terms of this particular strategy here. Got the entry, got the stop loss. Now, where to get out of the market at a profit? Quite simply, for this strategy, all I'm looking at doing is going to be trailing my stop below those tops in the market, exactly like I talk about in the that indicator video that I'm sure many of you have seen. If not, once again, link will be in the description. But in terms of getting out of the market at the profit, after we do get a new swing top in this case, I'm just going to be trailing the stop loss down, making it a trailing stop until eventually it does get hit. So that's trade 1 done and dusted. It's that simple. entering short when the screen turns red right at the close, stop loss is above the swing, and then get out when a swing top is crossed. That makes up that first short trade, and we'll go through some numbers soon, and that's the first profit for this particular strategy. All right, to figure out how much profit was actually made on the trade, I can subtract the entry price from the exit price, and that entry price would be $20,663.70, and the exit price in this case, when it breaks the swing top, ends up being the high of this particular bar here. That comes in at 19,493.23. Now, of course, there are going to be, obviously slippage, commission, all of that kind of thing. I'm not putting any of that into these calculations. I'm just, using the pure numbers. But when you're doing your own testing, of course, factor in some of those allowances into your calculation, so you're getting a true, meaningful set of data. But what we can see here, this profit ends up being about $1,170.47. So this is assuming some kind of leverage of some sort, or if you're obviously trading spot or you have the full amount of money, you'd have to be, putting up that full 20 grand for entry to actually, make the trade. But using some kind of leverage, you don't need the whole amount. Now, if this is foreign to you, do watch that leverage video I have in that Learn Crypto series. But that first profit is once again $1,170. I'll just obviously round those numbers for, simplicity, and I can just leave that there. So that's trade one done and dusted. So for trade number two, it's doing exactly the same thing, but just in reverse for going long. So remember, for short, the background turned red. I entered short on the close of that first bar. Now for going long, we can see the background turn green right in between these two bars here. Obviously, I can't draw a line in the middle, but as you can see circled, the entry price on this particular long trade is around that $19,692. Now, once again, the stop loss goes back behind the swing. As you can see, I've got labeled here, trade number two, stop loss behind the swing. And all we're doing here, once again, is just waiting for a swing bottom to be broken before this particular trade is exited. And obviously now, as you can see, this trade enters all the way back here, exits all the way up at this red dot. As after that breaks down, you can see the background does turn black as well, indicating that the trend has changed from up to that transition that I'm talking about. So to work out the calculations for how much this trade makes, once again, I'm not factoring in any fees or commission or anything like that. So just something to consider. But we are subtracting the exit price from the entry price, and that looks something like this. So we have the price of $20,853.36 subtracted from the entry price, being the close of that first bar when it turned green, being 19,692.5. See another profit of $1,170, exactly the same as the previous one. Let me double check that. Oh, yep, I see what I've done wrong. A little bit of a typo, just $10 difference. The closing price should actually be $19,692. So it's actually $1,160.86. Very close to the profit on the first one. But if I can just put this profit up here, I'll get that in our records, and we can move on to the next short trade. So $1,160 profit, 2 from 2, not bad. It seems like it's all pretty easy, but we know trading isn't that easy. But in terms of strategy, looking at 3 simple steps, once again, we are just working through obviously entry, stop loss, profit, and just getting the data. So we're really on to step 2 now. We're just gathering the data to see if the strategy actually works or not. And so far it's looking pretty good, but we've got a few more trades to cover. Typically for statistical purposes, you want more than what I'm covering here. It's 6 trades. You want at least 30 trades, but everyone needs to test to their satisfaction, as is always the case. But on to trade 3 now. What we're looking at here is the next short trade, actually our first loss in the system. But in terms of where it's getting in, where it's getting out, you can see the chart turn red, background turn red, right on this bar here. So the entry short is on that closing price. The stop loss is above the swing. Then we actually get a slightly lower swing top down there. So the stop loss is trailed. Now, if you're starting to think, well, I should just leave it at where it currently is, at the existing stop loss, I don't want the extra work of trailing it down, then you're not following the system, you're trading a different system. Things to keep in mind, no matter how minute the moves might seem, it is a matter of sticking to a system that you've actually tested and works for you. As soon as you start making little tweaks mid-plan, you're not following the system, and you're going to be getting different results, vastly different results to what you've tested and what you're expecting based on your test results. But nevertheless, this is a loss, entry at the open, exit once it breaks that swing top there. So let's work out how much of a loss it actually is. We can get our calculator back up and we can just do the simple sums. So entering at 20,080.1, subtracting from the top. Obviously, you have to work out exactly how much above or below these swings you want to put your stops, but for the purpose of this exercise, I'm just using the actual price of the swing top. Because obviously, in theory, the price could hit that, the swing top exactly and then, keep going lower. So you do need to have some kind of buffer of some sort. So this works out to be a loss of $749.11. So we can record that on the chart. I'll make it pretty and red so we can really gather what our losses are doing. 749 bucks. And here we go. So there's trade number 3 done and dusted, 2 profits, 1 loss. I'll even make that little negative just so it really stands out. All right, let's check out trade 4 now. So trade 4, once again, entering after the screen turns green, entering at the close price of that first bar, and then we're just trailing underneath swing bottoms until eventually it gets stopped out. You can see the background also changes. So once again, I'm not trying to give endless plugs for this indicator, although I wouldn't be without it. You just need defined rules for entry, stop loss, and where you're getting out. No matter what your strategy is, you just need those things defined so you can actually go away and test and get some meaningful data from what you can expect from your system. So to work out how much this trade actually makes, it is another profit because you can see the exit is obviously higher than the entry. It is a long trade, so the market has to go up to make a profit. But to calculate how much that actually is, we have $21,121.72 subtracted from the entry price being the close of the bar that the background turned green. That is $20,910.06, profit of $211.66. So I can now chuck that up on the screen as well, so we can obviously keep recording all our profits and losses. So what did that equal? $211. I'll just round down for that 66 cents. I'm sure nobody cares about 66 cents. All right, now we can get on to the next trade, which is a loss, another long trade that loses money. So what we're looking at here, once again, just rinse and repeat. Look for that background to change color, enter on the close of the bar, stop loss below the swing. You can see it didn't travel up very far and then the market started to dump. So that works out to be a loss on this long trade because obviously the exit is lower than the entry and the trade went long, meaning the market has to go up to actually make a profit. So the loss on this trade works out to be, I'll just clear that up for us. So the entry price was $21,363.22 subtracted from the stop loss price. Remember, it has to be either above or below the swings, but I'm just using these swings for the purpose of this exercise. It's a loss of $437.21. So I can obviously record that on the screen as well here, and we can just do that with another red writing, working out to be 437 bucks. And we can really start to see how this system has performed, at least over the course of the last week and a half. I am on the 4-hour chart. These strategies can be applied to any time frame, anything that suits, your temperament and your style. I'll just use the 4-hour just because it's what I had up on the screen when I wanted to put this together for everyone. So that covers 5 trades out of the 6 that you can see on the screen. Obviously, the chart has turned red once again. The market did break down. Entry would be at the close of this particular bar where the trend did change to down, and where it currently sits, the initial stop loss was above the swing, but as you can see, there's a new swing top. So there's an open trade at the moment, meaning there's a short position, but it's still in the market. It hasn't exited yet, and where the current stop would be above this particular swing top here. So you can see this trade is almost at risk-free. Entry here, stop loss there. It is a short trade, so the market has to go down to make a profit. Once again, check out that Learn Crypto series if you want to learn about short trading, leverage, all of that kind of thing. But it is more or less at a break even. The entry price is around that 20,750. Swing top is around 20,960. So a bit over $200 exposure at the moment. But if we're looking at how this system's performed, even in just the last week or so, completely mechanical. Once again, it's not a final system. You must always, do more testing to see if it suits you. But in terms of just a simple strategy, in light of the World Series of Trading coming up, thought it'd be interesting to look at some real trading as opposed to some analysis. Obviously, let me know in the comments if you do want to see more of these. These videos are kind of fun to put together. We can kind of test some strategies, look at some real trades, put some numbers to what we're doing. But in terms of the total profit or loss, we first had 1,170 profit plus 1,160 profit minus 749 loss plus 211 profit minus 437. So it leaves the account balance at $1,355. Now this is obviously assuming taking a whole Bitcoin on every position, using something like leverage, or if you have $20,000+ in your account, you don't need leverage. I cover spot trading and leverage in that leverage trading video as well. But if we're looking at what this actually comes to over the course of the 17th of June, we're up at the 28th of June. That's 11 days. So if we're looking at this, how much per day? $123 per day. And hey, maybe you want to take off $25 per day for fees. and that works out to be around that $100 a day, which is actually pretty cool. Now, if we go back to those 3 simple steps, does it end there? Well, of course, you need to decide for yourself whether that's enough for you to go away and make trading decisions from. But can it be better? Of course, it can be better. You can implement some filters. We can look at 50% levels. We can look at different ways of managing the entries and exits. You can have profit targets. You can have trailing positions. In this situation here, for this system, to keep it very simple, I was looking at an all-in, all-out approach. So what that means is I'm taking an entry, and then when the market does hit some kind of trigger, such as breaking a swing, it's all out. It's exiting 100% of the position. So there's other ways you can kind of balance your positioning, whether you're just looking at purely profit taking or, some trailing, some profit. You can have a mix of the two. So it certainly doesn't end with that, although it can, once you've done your testing and you've got enough data. But now we really move on to step 3. So step 1, we define the entry, define the stop loss, define the profit. Step 2, we gather the data. Obviously, there's nowhere near enough data, at least not for me. 6 trades isn't enough to, go away and make any final decisions from. But, in terms of the process, a 3-step process, we've done step 1 and step 2. And then for step 3, it is a matter of tweaking, testing, repeating until your objectives are met. And you might say, well, what are my objectives? And that's for you to go away and work out. How much are you willing to risk? How often are you willing to trade? There's so many questions you do need to answer for yourself before you can come up with something that suits you and your needs. That's the most important thing. That's why this is not financial advice, because there's too many, very objectives and too many different things that people are looking for in whatever it is they're doing. So they need to make decisions. You need to make your own, do your own research and find something that suits you. But step 3 is just going back, looking at the data and making any tweaks. And if you do make any tweaks at all, it is a matter of going back through, back to the beginning and then retesting, because every tweak you make is going to affect the results in one way or another. So in this one short video, we have covered loads of ground, looking at a 3-step formula to create some kind of system or strategy, how to actually go about testing some results and putting some numbers to the results, and then what to do to improve it as well. I've covered a bunch of topics. Once again, I will leave links in the description below, such as short selling, leverage trading, the indicator as well. And of course, there is the World Series of Trading coming up as well. If you do want to put your skills to the test after you've done your own homework and make sure, everything suits your needs, there's up to $8 million worth of prizes as well. So check those links out in the description below. In light of ByBit's World Series of Trading coming up, I thought I'd jump back into their platform. I do often get requests about, their order tickets, how to do it, all of that kind of thing. I do have a video that I go through that in detail, how to make $100 per day trading crypto. I'll leave a link for that video in the description below. I go through the platform in a lot more detail, but just to go through some order tickets now, that's what I thought I'd do. But if you are interested in the different margin types, how to place orders, getting set up basically from start to finish, do check that video out because it goes through a lot more detail there. But in this system that I've been talking about, entering at the, the close of a bar when the trend does change and then placing a stop loss, there's no hard profit target in this zone. It is a trailing stop where you'll have to manually look at the swings and update those stops. But the, ByBit also does have a mobile app, which makes it very, very easy to do. But if we are looking at just the order ticket, it would be a market order when that bar does close. So you have to know what hour it closes on. I'm using a 4-hour chart. So it would be a matter of buying or selling, 1 Bitcoin in this case, which is what I've done in the example. I'm not recommending anybody go and do this, but for the purpose of the exercise. So it is a matter of placing at market, buy long with TPSL, standing for take profit stop loss. And you can, there's no profit target, so you can just leave that blank, but you can put your stop loss in. So for example, if I was to be using this order ticket now, it'd be market price at whatever it is here, 20,623. And then the stop loss, for example, if I'm looking at a previous swing top, I'm going long, so to be putting it below the market, the stop loss would just end up being below there at say $20,466. And you can see there the loss will be $162 if it does in fact go down. So that's all that's doing is calculating from that price down to below that particular bar. Now, if I was to be going short, I'd simply just use the same ticket, sell short with TPSL. Once again, for this strategy that I'm talking about, I didn't use any fixed profit targets. It was a trailing target based on the swings on that indicator. But if we were going short, at market, stop loss, behind the swing, end up being about $20,959. So that's going to be looking at a potential loss of $331. That's if it was to enter at the market price and then the market go up in this case, because it's a short trade. Short trading, the market needs to fall to make money. If in fact I go short and it goes up, it's going to lose money, which is why the stop loss just above this particular bar here at $20,959 would in fact be at $330. So you see it's dynamic. So that number will keep changing until you actually execute the order. And below there are some buttons. I'll just move my face out of the way so you can see when you've got those order tickets ready to go, whether it's market, I also go through conditional orders and limit orders. You can just go ahead and hit those buttons there. And if it's market, it will get executed straight away. So it's just something to keep in mind. Conditional, on the other hand, is based on a condition. So once again, if you want more details about conditional orders, do go back and watch that other video. That's a wrap on another video. If you did enjoy this style of video, make sure you drop me a comment below, starting with a little up chart emoji. That way I know you've watched all the way to the end. And until next time, I'll catch you then.